headline that should confuse you. Talabat grew revenue by double digits and its profit fell by double digits. Same company, same quarter. On most earnings day, falling profit is bad news. But Talabat stock guidance went up, not down. So which is it? A business in trouble or a business making a bet? Today we untangle exactly that, because getting this one backwards is how investors misread growth companies. Officially reported second quarter revenue rose 16% to 1.14 billion US dollars and order value hit 2.92 billion US dollars, while adjusted profit and net income both fell double digits. And yet management raised full year guidance across every metric. My read, this is a company deliberately trading near-term profit for long-term growth, and this quarter it told the market that trade is working better than planned. Start with the contradiction, because it's a whole story. Fact. Revenue and order value climbed, but adjusted EBITDA fell 13% and net income fell 18%. Margins compressed. My interpretation, this isn't a business losing its grip, it's a business choosing lower profit today. Talabat earmarked around $120 million this year to invest in growth. That spending flows straight to the income statement as lower margin now, in exchange for a bigger, stickier business later. Where's the money going? 3 places. First, Talabat Mart, its grocery arm, which is becoming a cornerstone of order growth. Second, Talabat Pro, the subscription program, which now accounts for more than half of all platform order value, with 1 in 4 active customers subscribed. And third, new retail and everyday ventures. Why it matters? These aren't vanity projects. Subscriptions and groceries are exactly the things that lock customers in and make future revenue more predictable. Now, how do we know the bet is actually working and not just a story management tells to excuse weak profit? Here's the tell. Fact. The company raised its full year guidance across the board. Order value growth, revenue, profit, and cash flow all revised up, because the first half came in ahead of plan. My read, a company burning money with nothing to show for it doesn't raise profit guidance. Raising it is management putting numbers behind the narrative. And here's the part that makes the whole strategy affordable, the cash. Even with thinner margins, Talabat generated $266 million US dollars of free cash flow in the first half. My interpretation, this is the beauty of an asset-light marketplace. It doesn't own the kitchens or the inventory, so it converts earnings into cash at a high rate. That cash lets Talabat fund the growth investments and return money to stakeholders at the same time. A 90% dividend payout policy plus an active buyback. It doesn't have to choose. But be honest about the risk. The profit decline is real, not imaginary. The payoff has to actually arrive. Margins have compressed for several quarters now, and investors will eventually want to see them turn back up. And some of this quarter's order value growth was flattered by the timing of Eid and by currency. Strip those out, and the underlying rate is a bit lower than the headline. My read, none of these breaks the thesis, but they are the things that decide whether it holds. Does management sound confident? Emphatically. They raised guidance, kept investing hard, maintained a 90% payout, and are buying back stock, all at once. That's a leadership team that believes its own strategy. My assessment, this quarter strengthens the long-term story, but only if you understand what you're looking at. Falling profit here is a deliberate investment validated by raised guidance and backed by real cash generation. Before next quarter, watch 3 things. The margin inflection, when adjusted profitability stops falling and turns back up. Traction in Talabat Mart and Pro, proof the spending is buying loyalty, and the underlying growth rate once the Eid and currency effects wash out. The profit dip is a choice. The next few quarters show whether it was the right one. Revenue up, profit down on purpose, guidance raised, cash pouring in. That's Talabat this quarter, and now you know why the falling number isn't the bad news it looks like.